Yeah, thanks for having us here. We want to talk about the role of central banks in a tokenized or for a tokenized economy. Before I start, maybe a couple of words on Accenture. As you said, thanks, I'm Nils. I'm responsible for our public sector and banking cap markets strategy business in the German-speaking region. And I run our digital euro work across Europe. Maybe a couple of words on Accenture, just very quickly. We are a European company. Actually, we're an Irish company. And we have about 60,000 people working in Europe, 800,000 people worldwide. So it's quite a big tech company. We work for the 50 largest central banks worldwide, and we do a pretty wide spectrum of work. So we do the kind of heavy tech lifting stuff. So we basically build or design and build the RTGS system for the Bank of England, which goes live in the second stage in April this year. But we do on the other side of the spectrum like really cool experiments around, for example, CBDC in Asia or wholesale CBDC with the Banque de France, a really wide spectrum of things. Now let's maybe go to the role of central banks in the tokenized economy and our perspective on it. We don't really know if the token economy is going to come, but we know that if it will come, it will bring many, many, many new use cases on the business side, and this will basically drive many, many new payment needs on the payment side. Yeah? And this is true basically for all user segments. Yeah? Retail customers will want to buy cool fractional shares of housings, want to invest in new things, want to send money all over the world without paying any fees. Institutional investors want to buy tokenized assets in an atomic trade against safe money. The global payments in different currency want to be safe and transparent and efficient. And the area where we want to focus on today is the B2B space, because it's a little bit left out, but it becomes more and more important in the last couple of months in the work that we are doing. So in the B2B space, basically that's the real world, right? That's where our wealth comes from. It's where in the future our physical work will be done by physical robots. Our intellectual work will be done by teams of agents who completely autonomously interact with each other. And all these things around us will be produced by manufacturing X, where highly integrated machines work independently and autonomously with each other. They will exchange physical and non-physical services autonomously. And to foster this, we will need a payment side that is up to the job, basically, that will basically cater for all these new needs. And we know all the, let's say, buzzwords: micropayments, nano payments, streaming payments, autonomous, highly programmable payments on a global scale, super cost efficient. But that's actually the product, a development in the B2B world, which we foresee requires. So where do we stand against all these needs? And I think the conference is basically covering many of these products. The primary kind of sector which is responsible to deliver on these products needs is the private sector. Yeah? It's not central banks. It's basically the job of the private sector to support the industry with payment needs. Yeah? And that's what's happening, and I think that's what the conference is in parts about. Yeah? It's about commercial bank money tokens, it's about stable coins, and the whole spectrum of stuff out there. Which basically we cover too, but I personally focus on central banks. Yeah. So if we look where we stand today with the offering of the private sector versus the needs which we just described, then we have a lot of open points. Especially from a European perspective, we're not super happy. So we have a lot of work to do. So I think we covered the retail part today extensively. The European industry is trying to produce some good solutions, but Vero is a good example right now. Lots of promises behind it, but so far we don't have a European product that basically covers, all the user needs, or basically the things which we see coming up in the future. On the institutional side, we have commercial bank money tokens, we have stable coins, but what the big, large institutional investors are really looking for is a safe currency, safe central bank money. We didn't solve the global cross-currency large value payment problem so far. There's a G20 agenda behind it. And the area where we want to focus now on is the B2B area. We see a lot of private sector activities there. So, for example, JP Morgan is working together with the industry worldwide on really cool use cases to solve IoT use cases, machine-to-machine use cases, and all these things. But there are 2 or 3 points which are still open. So the first one is, are we really, and that's a European perspective, right? Are we getting the same problem we have in the retail space, that for B2B payments, we will have US products only? So will we have a strong European banking or payment service provider industry which is able to deliver for our kind of real industry the payment products we need? Or will we basically step by step end up in the same situation as we are in the retail space? So will we have euro-denominated and European-controlled modern payment products for the industry? That's the first problem. The second problem is basically applies to everybody, and is a classical problem. If you have private money servicing any need out there, and also the industry needs, B2B needs, then in the end, you want to settle on safe money. That's what we have today. We have electronic money and lots of use cases are serviced, but in the end, you need a platform in each currency area where the banks can then settle their electronic money. And for this, and basically it's for liquidity, for risk reduction, interoperability, and so on. For this, basically, that's the job of a central bank. So there is definitely a job for a central bank in the future token-based DLT money economy. So, but before we jump to that one solution, which we also talked about, I think, with Alex Hachmeister in the morning, let's see what the spectrum of solutions are, which we came up with, because we see 3 possibilities how to service the B2B space from a central bank perspective. So on the left side, you see the DESP, it's the Digital Euro Service Platform. It's basically the retail digital euro. That could be one product that solves the B2B problem. So basically, just imagine we have, in a couple of years, you will have the retail digital euro out there. It's hopefully a good product, It's pretty cheap, but it is restricted to consumers and merchants, basically to retail use cases. So why, actually? Why? If we are the industry, we have a need, why can we not expand the scope of the retail digital euro to cover a couple of our B2B needs? Because it's obviously, it might be really, really cool to use it, Streaming payments, highly automated programmable payments, European-wide, maybe even cost-free for one of the 2 parties. And actually, and we all know that ECB excluded this kind of scope enlargement to the B2B space. Obviously didn't want to mess up with or increase complexity and get into the bank's kind of business models too much. But ECB is basically asking the question, or maybe thinking about it. And then there's this innovation partnership, the platform that is open to do some experiments. on the digital euro service platform, and a couple of industry players are actually experimenting with the platform if it is possible to service some of the B2B use cases. On the other side of this, and that's pretty real, right? It's going to go into production, and it's not short term, but we know the timeline, and we know that something is coming, so that's pretty real. On the other side of the spectrum, on the right side, that's a bit far out. But just imagine a tokenized DLT-based central bank currency running on any DLT out there, yeah? On any business DLT. Just build your business DLT and then you have your currency available to you on your network. Technically, that is not a problem, right? But just imagine a central bank, you know, we all know they are pretty risk averse. They want to control everything. Hello. And for good reasons, right? For good reasons, yeah. So this solution that you have a central bank DLT currency that is running on any external chain, a little bit like cash. Yeah? You don't control where your cash, and it's your money, right? You don't say, oh, I don't want this in bars or something like this, or whatever networks. But there are a couple of experiments running out there, and I think it's just an interesting way to think about things. Most probably, let's say the most promising solution might be the middle one, where the B2B use cases is left to the private sector. Yeah, the commercial banks, they develop cool stuff. Yeah, and our big corporates love them. And the central bank basically caters for the ability to settle different commercial bank money tokens or stable coins or whatever the industry will come up with on a integrated platform against safe central bank money. That's basically what these Track 2 trials is all about. Yeah? So basically that's and that's basically the typical role of the central bank. It's not new. It's what we have today, yeah, because commercial banks are offering money, electronic money, to B2Bs today, and they settle it on central infrastructure for good reasons. So let's maybe look at how such a platform could look like. Yeah, so conceptually, and we are basically building prototypes and look from a pretty technical side on it. So basically, there are, I would say, four building blocks. Yeah, and the platform is basically everything which is where it says common central bank platform. That's the core platform, and within that core platform, which is basically ruled, secured, and run by the central bank. So that's safe central bank space. Nobody can mess around there. The rules are set by the central bank. In that safe space, there is the core ledger. That's where the actual currency, the euro, the pound, the dollar, basically runs on a DLT. And then, pretty straightforward. And then you have sub-DLT1, sub-DLT2, and so on, which is basically due to different technology choices the industry might have in any moment in time, yeah, because that might change. You never know what's coming. And the central bank common platform basically caters for different technology platforms the industry might want to put forward. And the commercial bank money tokens, the stable coins, basically reside and sit, also regulated by a central bank. And then the settlement is basically straightforward. It happens between the sub-DLT of the commercial banks and the core ledger where they hold central bank DLT money. Pretty easy. And a couple of other things, like obviously you still need to have funding, defunding for your central RTGS system. You typically have a API gateway to connect to the market. And then we have this marketplace services up there, which is in a intermediary zone, let me put it this way, which is out of the perimeter of the central bank, where the industry can basically develop whatever services they want, and step by step offer new services. Basically, that's all on a high level. That's the concept. It's not the only concept. There are many concepts on how to basically build a platform that can support commercial banks in servicing, in our case now, the B2B payment needs, but also any other payment need out there. There are many other concepts. This is one, but basically you need to maybe start with one. We do a lot of experimentation around it, obviously build prototypes, technical prototypes. I don't want to go into the details. Obviously, to build a technical prototype, we need to detail it out. And actually, technology is not, let's say, simple, but it's not the biggest problem, but you need to do it to basically understand what your policy choices, your business needs, etc., have as an impact, and if they are basically doable. Let me conclude maybe with three messages. The first one is we actually believe the token economy. We actually don't know, we did a lot of kind of research and stuff like this. When is it coming and so on and so on. We don't really know, yeah. But there's a lot of potential behind it because obviously as Europeans, what is the next wave of productivity? Everybody is basically looking for it, yeah. It's not building cars anymore, maybe. So we really need to find the next kind of wave of wealth and productivity for the region. It might be in this kind of physical machine world. Don't really believe that we're going to basically run the AI agent world, but maybe the physical machine world, the physical robo world, and they will definitely need, as they are autonomous, they will definitely need a payment system, a payment infrastructure that is up to the job, basically, and be the most competitive region where we can basically then export robos to the rest of the world. Hopefully. We like to do this in Germany. So what do you need for this? Do you need central banks? Do you need central banks for this? Yeah, I think we think central banks have a job to do. Yeah, they did a really good job in the classical electronic payment space, being the settlement engine for banks, for commercial banks, private banks. So I think the same job is required in the new world, in the tokenized economy and tokenized money world. We need a settlement engine for banks who cater for that stuff. Better be in Europe, better be quick for European banks to not basically lose the race again in payments. So central banks need to be pretty quick as well. And how does it happen? We actually believe, obviously, that no central bank can invent by themselves such a complex product. It's impossible. Yeah. It was difficult in years ago. We believe this is even more difficult and more complex. So to build a product that is really fit for the job, you need to work with industry, and not only the banking industry, but as we said, it's a big B2B world, so it's a big collaboration, co-creation, and that's the way forward we see. Questions?
You mentioned earlier this idea of a central bank having perhaps a CBDC that is then free to move on to other chains. I'm not sure if I understood you correctly, so please correct me if I'm wrong, but would that not be very tricky to sort of control, because if it's on another chain, it's no longer within the jurisdiction of the central bank, and a nefarious player could perhaps issue more, wrap them with something else, call them CBDC plus or something, and that then immediately compromises the integrity of the central bank itself, right? how would you manage that if that's what you meant?
Let's talk about this next year, maybe. I think it's a big question. It's a big question. We just started actually to do a couple of experiments. We think technically it's not a big problem, but we didn't actually start the experiments, to be honest. We just started to have the design concept around it. We actually don't believe it's a technical problem. It's a huge governance and compliance problem, and actually a cultural problem as well. Yeah.
Thank you.